Hello, my name is Benjamin Cox. I am the Managing Director of Oreninc, and I am here to present for this uranium conference an update on the uranium financing market and where and how capital is being sourced. Oreninc is a small boutique merchant bank that focuses on capital costs, raising capital, and building companies. We have a relatively short track record in a couple of years, but as a team, we've spent a few years in this business previously doing other things. In past lives, I've done jobs such as being a senior analyst at D.E. Shaw, which is a medium-sized U.S. hedge fund with about currently, I think, $28 billion assets under management. And I've also been involved in the management of junior mining companies. We at Oreninc keep track of every financing in Canada, the cost to raise the money, who's raising the money, the terms, and the timing of the raising of the money. The fact is, the tsunami is still not cleaned up from a financial markets perspective. We started collecting data January 1st, 2011, and from that period, you can see the absolute shift between Q1 2011, which was a healthy market, and all the periods since then. The fact is, the uranium market as a percent of the total money raised in Canada has been in a free fall, while the total money for high-risk juniors in Canada has also been in a free fall. So uranium has faced a double whammy of both the tsunami and the general market crisis. One of our theories is that the uranium market actually set off the general market crisis. That the tsunami and the lack of faith in that market spooked the investors in 2011 and set off the overall issues outside of uranium. However, even if that is the case, it's still extraordinary to see how much uranium has lost as a percent of market share in the total junior finance capital market. How this is broken down is basically the number of deals that have happened quarter over quarter has stayed roughly the same. Every quarter, there's been a certain number of uranium deals. Traditionally, uranium companies have financed in Q1 for the most part, but even in other quarters, there have still been deals. What has happened, however, is while the quarters have stayed the same, the dollars raised has fundamentally shifted. So Q1 2011, which we believe was a healthy quarter, $250 million was raised. Q1 2012, less than $100 million was raised. The fact is, less money is being split among the same number of companies, and this is leaving each company with an inability to get its stuff done on an individual basis. Where this, however, really helps is it pretty much means that investors who have money can dictate terms. They've got the ability to dictate how much money should go into their projects. The question is, where has this money gone? Or a better question is, where have the brokers gone? The reality is, for the first half of 2011, there were lots of brokered offerings in the uranium space. The number of brokered offerings after that period fundamentally has disappeared. Lots of brokers have left the uranium market, and more importantly, the brokers that are left have been doing fewer, smaller deals. What does this mean? It means that fundamentally, either the brokers are gone or the institutional investors' faith in the uranium market's gone. We're not sure which one it is, but the reality is this is really, really bad. And for the market to come back, we need to get more brokers, more IBs involved in the business, and we need to get an institutional investor base that is back looking at uranium from that perspective. Not that this gives you any comfort, but it's not just uranium that is hurting. Looking at slide 5, you can pretty much see that brokers have left the entire junior mining space. Total number of brokered versus non-brokered offerings has fundamentally, non-brokered have stayed relatively flat, but brokers have fundamentally condensed their number of offerings. In Q1 2011, 227 brokered offerings happened. By Q4 2012, it was down to 99. But what's more scary is the dollars raised. Dollars raised in Q1 2011 was $5.3 billion. And By Q4 2012, dollars raised was $1.8 billion brokered. That means that $3+ billion have disappeared, or roughly $3.5 billion have disappeared from the brokered market. Easy money has disappeared, and what has replaced this has been very much harder to find non-brokered money, but even that is down by 50%. It's not comforting to the uranium market to know that other markets are going through this, but the reality is the uranium market has been hit by a 1-2 punch. Punch 1, there was a fundamental shift in the uranium market due to the tsunami. Punch 2, there was a fundamental shift away from risky assets. So, what can you draw out of this? You can draw out of this that the overall market is weak. Now, that doesn't help, but it sort of does help. In that you have to understand that this is a period which you have to start looking for quality assets. You've got to stop looking at every asset and say, yes, that will make me 5 times my money, and start realizing that money is going to quality assets and it's going away from non-quality assets. Our view is institutional investors this year want to see 3 things. They want to see ore bodies that are either are material or will be material. They want to see real resource statements, and they want to see economics that make sense. Even with that, however, if you look at the dollars raised by offer size, most of the money is still flowing to very large deals and not towards the junior market. But if you want to get to the point where you can actually fundamentally get stuff done, you have to have a good project in uranium or in any market this year. So let's say you're investing in a small company. What does it mean when a company can raise less than $910,000 or an average of $910,000? The reality is it means that exploration is not going to get done that year. Now, it could be that the company has a real option, has a real property, has something that is so amazing that it's worth waiting a year. And the fact is, probably half the junior market companies have something like that, or at least not quite half, but significant numbers do. But the reality is, when you see small financings, you have to understand who gets paid. Where's the money going? And the reality is the money is going pretty much in this order. First, the government gets paid, then the exchange, then the bankers, then the lawyers, then the auditors, then maybe the office space, probably not the IR teams, management hasn't gotten paid for a while, and exploration? Did you say exploration? That is not fundamentally getting funded by small companies. The reality is if you're raising less than $500,000, there's no money for exploration. There's just money to keep the lights on. To get exploration done well, you need to be raising $1.5 million plus. And the reality of that is that we think that a certain number of small companies are not going to make it this year because they can't actually progress forward unless the market fundamentally turns. The reality is large companies can still find cash. This slide, which is slide 8, shows you that if you have a large oil and gas company or a large cap gold company, ideally raising more than $100 million plus, money is still out there, and money has not fundamentally left the market. What this slide also shows you, however, is if you're doing a small cap gold company, or if you're doing other, which is where uranium falls, the money is at a quarter of where it was Q1 2011. The market fundamentally has forgotten the non-major mining companies. And if you're in the uranium market, you can see where money is flowing on slide 9. You can see that basically uranium has had its share of the pain. It's gone from taking about 4.5% of the market in its best quarter in the last 2 years, which is Q1 2011, down to quarters where it's gotten nothing, like Q3 2012, where fundamentally the money has disappeared. The reality, however, is that uranium is still getting money. There still is money for high-quality companies, and as an investor, you can draw 2 things from this. The first thing you can draw is if you have the money, you have the power. You can negotiate with the companies, you can get directly invested in companies, you can put your money directly on the balance sheet. The second thing you can draw from this is focus on quality. At Oreninc, our view is in a market like this, you have to focus on buying high-quality assets and focus on not buying low-quality assets. Our conclusion. The reality is the tsunami caused an immediate market reaction. The tsunami shut down the uranium finance market. And nothing is going to change that. However, the rest of the capital markets fundamentally followed the tsunami. It wasn't like it was just uranium that got beaten up. Anything with risk attached to it post March 2011 fundamentally got beat up. Money was driven from junior companies towards majors, and institutional and flow-through and lots of other investors have left the junior market space. This shows up in the fact that brokers have fundamentally reduced their size of their brokered offerings, reduced their books, and are fundamentally starving. I mean, if you want to see scary sights, go to Toronto. Meet some brokers. They're more depressed than anyone else is. Brokers are fundamentally not being able to dial for dollars, and therefore they've stopped dialing for dollars. This is a self-fulfilling prophecy. However, this is wonderful for the retail investor. This means that you as a retail investor, if you have new money, have the ability to buy stuff on sale. Stuff is going for nothing right now. And the thing about market bottoms is, if you buy when no one else is interested, you can actually make real money. The key, however, is focus on quality. Focus on making sure you understand the quality of the asset, the quality of the management team, and how is that asset going to survive this market without blowing out a share structure, doing something really stupid. Terms are available for raising money. There is money out there. There are projects that are worth funding, and the uranium market's not going to disappear. Next year, we're still going to be using uranium. The problem is we're at the bottom of a really ugly market. And in markets like this, that is when you can make real money. That's when if you put money at work intelligently, it can really pay off. Thank you for listening to our presentation on the uranium finance market. Oreninc keeps track of every financing market, and you can go to our website and download the report on which brokers are financing uranium, and you can also download our uranium quarterly sector report. This data you'll find very useful to identify which companies to invest in, how to look at what brokers are actually supporting, and get a good overall sense of the market. We are happy to help people. A lot of the times we do work, answer questions for free, and we're happy to build relationships. Normally we make our money off doing custom work, and we make our money off of restructuring companies. But we certainly like to help investors, and if you have any questions, feel free to ask them. Thank you.